We have heard about Nifty, Sensex, Nifty 500, Nifty 100 and a lot more. So what are these? These are index or indices. So what are indices? Today we are going to learn about index or indices. Hi, this is Kenz from Milliondots. So we are going to talk about stock market index. So what does this term index means? Index is a tool which is used to measure the change. So what is a stock market index? Obviously, stock market index is a tool which is used to measure the change. So you know that there are more than 7,000 companies listed in NSE and BSE, and it is very difficult or it is less practical for you to check all these companies in order to understand what is the rate of change of the market or where the market is heading to. To solve that problem, we have index. So index is grouping of similar stocks in order to understand the rate of change of market. Since it is pretty difficult for us, in order to analyze all the 7,000 to 6,000 stocks which is being listed on exchanges, we have index. Basically, index is grouping the top performing or top kind of stocks and analyzing them as a single one or a single term and understanding the sentiments of market. So grouping of stocks, I've told you, index is grouping similar stocks together in order to make the measurement easy. So this grouping can be done on various aspects. It can be market capitalization, it can be based on sectors, it can be based on stock prices and even more. So with this kind of grouping, different indices are formed. And how does this indices get its value? For example, let us take about Nifty 50. Nifty 50 is the top 50 companies listed in NSE. So how does the value of Nifty 50 has been determined? It is the free float market capital divided by the base market capital, which is the market capital initially when the index was formed, into the base index value. For Nifty or for Nifty it is 1000. So that is the formula that actually used to find the actual value of the Nifty or the index. So let's learn about different type of stock market indices. So the most common indices that we have heard about is Nifty and Sensex. So those are the benchmark index. Nifty 50 is the top 50 companies which are listed in NSE or the National Stock Exchange, and Sensex is the top 30 companies which is listed on BSE or the Bombay Stock Exchange. So as I've told you, those are the benchmark index. And we have another index which is being grouped on the basis of sectors. So those are sectoral index, which are Nifty Auto, a group of stocks which represent the automobile sector, and Nifty Financial Services, Nifty Bank and a lot more. And we have the index which are divided in terms of market capitalization, that is Nifty mid cap, small cap, large cap, we have heard about that. And we have index which are based on broad market index, which are Nifty 500, Nifty 100, etc. So what are the uses of these indices? Basically, indices are used mainly for the selection of stocks for investment. For example, if at all you need to invest, if at all you are planning to invest in stocks and you don't know which segment of stocks you need to invest in. So here Nifty or the kind of index really helps you a lot, because it gives you an idea where the market is heading to and which segment or which sector is actually performing up to date. And the second part which is being used as an application of index is regarding the sentiments, because Nifty or any other indices gives you a very clear idea on what is the sentiments of the market. And as a third application, index is always considered as a representation of the market. To understand where the market is heading to and what are the sentiments of market and anything about market, it is always represented by the index. And that's just a quick idea on what indices are. So stay tuned for more and make sure you subscribe. Thank you.